Hi, everyone. This is Manoj Kulkarni. I'm going to introduce you to the first module on investment banking. So let me quickly share my screen. Yes, this should be good. Okay, so let's start with this. The initial set of topics, what's been lined up mainly is to really introduce what is investment banking all about. And before that, I'm gonna run you guys through what is macroeconomic. That is, there are different cycles to it. So we are gonna try to understand what exactly is a macroeconomic mean, and then followed by the various set of participants in investment banking. And then if you see the current set of expectations what you have, it is mainly to kickstart your careers on investment banking, and also to get you guys introduced on the capital markets domain as well. There are various levels to it because um, there is always a differentiation between the change the bank and run the bank concepts right now, which really exists. So we have to always make sure that you understand those differences in order to get into the right career stream. So that's a quick intro on what you can expect from this particular course. To give a quick intro from my end as well, so I bring in close to 14 years of work ex, mainly on investment banking, capital market side. I'm also a business analyst, is certified on CBAP, and I also have been working with a lot of tier one, tier two investment banks, to name a few. Citigroup, followed by Nomura, and then Morgan Stanley. And presently, I'm working with Credit Suisse as a lead business consultant, managing the risk management side of it, and that is across all asset classes. And yeah, so that's a quick intro from my end as well. So let's see what's further on this. So this, if I have to really run through a quick summary, it really gives a good understanding of what is expected out of you in terms of investment banking experience, or rather, what would be your basic learnings from this module. Um, these are pretty much summarized in such a way that even if you don't hail from any of the finance background, but still it will be easy for you guys to understand this and take it forward from there. That's a quick summary and what you can really look forward to. With that introduction, let me just move on. Okay, so this is what I was talking about, the macroeconomic factors. Um, so generally, what happens is for everything to function in a current world, the basic factor what we would need is the money, right? So you are seeing two types of business houses which are present here. One is household, the other one is the employer or firm. So what happens is, on household, you always have something like land, labor, capital. That is the factors of production which we call. So, and the other side, you employer or the firm, we generally call them as a business house. So, there is always a good amount of interaction between your household group as well as your employer or firm, in order to make sure that there is always an exchange of goods and services with that of a income, right? So for example, if we take Apple phones, right, Apple iPhones. So Apple is a company which is really based out here, and then household are all our consumers, so like me and you. So we are based out here. So they take the labor, they take the various factors from household, and they prepare a product, or it is something which is useful to you, right? It has some utility value. So they're going to prepare something and they're going to deliver it back to the household, and we purchase those set of products by paying some money to it. So that's how actually the money keeps flowing between the household group as well as your business groups. So in spite of doing all this, right? So that's how money keeps changing, and we generally call that as in economics M1, M2, M3, and M4. So it's also called as a money multipliers. um, anyway, so I'm not gonna go in depth on those concepts, but just coming back. So in order to do all this, right? If you are an entrepreneur and you want to set up a business or a firm, and you further want to make sure that you want to really develop a certain product or addressing a particular need, then what happens? Due to this, you are bound to do certain set of activities, right? By taking, either you need, the first thing what you need is a fixed capital, and even a machinery or even a land in order to set up your firm, right? So in these set of things, you always make sure that these factors of production are taken into consideration, and further you have to go ahead and uh, develop it, right? So with these things, it makes out one particular thing clear. That is, you need good amount of capital on day-to-day basis to make sure that your firm will sustain for a longer period of time. So that's where even investment bank will really come into picture. So if I have to move further, then something like we have to really check through what is this financial system. I generally call that as a whole financial system, because there is a lot of finance involved in and out, and there are various participants as well, who actually they will be responsible, either to make sure that you exactly know what is being asked for, or you exactly understand what exactly you really understand what your customer need, or you have to operate in a particular environment. It can be only the regional one or the international markets. So all these factors will come into picture. Going forward, if you see an overall view of a financial system, right? So this is how it's going to look like. So the first level will be all your financial markets, then followed by financial instruments, then also followed by financial participants, financial regulator, and financial services. So these will help you to understand what is the categorization which we generally follow. And when you have to really boil down on financial market itself, then there are various asset classes which comes into picture. Capital market is mainly meant for those firms where you need to raise a capital from public, and that is really done via a primary market. And then once a company gets listed into the stock market, then comes your secondary market, where it's really traded, the shares, or whatever we purchase directly from the markets, right? Like in India, how we have National Stock Exchange, and on London side we have London Stock Exchange and Dow Jones. So these are the various exchanges in where particular asset classes gets traded. And again, this primary is they are further divided into debt market and equity market. Further going by this money market, this is mainly meant for the short-term instruments, where you have to make sure that um, your working capital is met by catering to your short-term requirements by either having something called as a commercial papers, or a bills of exchange. So these are meant for a certain limited amount of duration, and then you have to make sure that these instruments are used to take care of your requirements. FX market is pretty much simple. That is the USD INR, USD GBP, or Euro INR. So however it's gonna trade. And derivatives market, That's a bit more complicated. I'm going to deal with that in detail once we really get to that particular section. So if you just see here, so these are like money markets. Further, T-bills is mainly existing in US, but not in India. Certificate of deposits as call money market. So this is between the banks. Commercial papers is also. So these all are debt markets. So why we call that as debt, because they give you an option to offload your working capital by taking some loan for a shorter period of time. So that's exactly how a financial system looks like.